Hey guys, how are you? Somebody give me a sound check. Let me know if you hear me okay, if everything is good. Let me share my screen. I want to share this screen. Share this, and we're gonna go to here. Let me know if you guys are seeing me, if you guys are hearing me. Let me just double check on my other screen oh, there we go. You see me? Okay, very cool, very cool, very cool. I see you guys. Hey guys, chat me up. Hit me on chat. Let me know if you guys are seeing everything okay. I am gonna go to large screen. I want to go full screen. Present. Let me see if this works. Yeah, looking pretty good. Okay. Hey, Keith, Juan. Good morning, everybody. Audio is good. I have an echo on the audio, or am I okay? No, I got rid of my other audio. So is my audio okay now? Let me just make sure there's no other echo, please, so that we don't have any sound issues. Give me a sound is good message. Sound good. Type that in just to make sure that I'm doing it, that I'm not having any issues. Okay, sound good. Okay, all right. So everybody hears me fine. Okay. All right. Thank you so much, guys. I just want to make sure that we got sound is most important. Visual is second most important. So we're all good. Thank you, guys. Hi. So good to be with you guys. Back from vacation, back from Cancun. Had a really, really great time in the sun. See my little tan lines. I actually do get dark. All right. So everything looks really good. We're gonna start in just a second. Today is a really, really fun webinar. I'm going to share with you the scalping techniques that we've been refining and trading in our live day trading room, both for personal accounts, but really, really primarily for passing the prop test with our favorite prop shop, Apex Trading. I literally, while I was away, I had people pass the prop test. I've been having 2 or 3 members pass the prop test every week using these techniques. So it's really wonderful to see so many people getting funded. Some people have gotten funded to a tune of about $500,000 already out of Apex, and some of them are collecting already $5,000-$6,000 in payouts of their first payouts. So it's really, really good to see that these techniques are paying off in both their personal accounts and in their prop accounts, which is really, really great. And we'll keep refining them. We'll keep making them better. But the key thing that I want to talk to you about is today how simple these things are. I'm going to show you everything that we do here, exactly how we trade. Maybe I'll take a couple of trades, or at least I'll show you a couple of trades I took just an hour or two ago. And hopefully that will inspire you to give it a shot, because nothing is really complicated. It's just a matter of being on the right side of flow, which I'm going to show you exactly how to do. But before that, let's talk a little bit about just trading itself, because I have this conversation with people all the time. And I think anybody who's sort of coming in, who's brand new, and I'm actually, curious, type into the chat box if you've never traded before. Just type in the word newbie, like Noobi, as a noob. Type in if you've never traded before as a thing. I'm just curious how many people I hear like that, and some people who type in next if you've traded but just haven't had a lot of success. So there's a couple. Hey, Brian, good to have you. Great to have a lot of people who are new to the markets, because I know it can be very intimidating. I know it can be sort of very, very assaulting in terms of information and everything else, and you can feel sort of really overwhelmed by what's going on. One of the great things about doing retail prop, about essentially taking an evaluation test, is that you can learn about the market. As a matter of fact, I would make the argument that the greatest value of prop trading, this is I'm sure a very, very controversial statement to make, but in my opinion, absolutely true. The greatest value of prop trading is not getting paid on other people's money. The greatest value of prop trading is learning on other people's trades, meaning that when you're doing prop trading, you're trading in a demo environment, but you're trading with a real intent and real consequences. And it's exactly like being trained in a cockpit, in a virtual cockpit, which is how all pilots get trained right now. And even, in fact, even a lot of tank commanders and everybody else who is in charge of multi-million-dollar equipment, they actually get trained on these virtual machines. Why? Because the learning is the exact same thing as reality. And once you have those skills, once you have trading skills, the power is unbelievable. Not only do you have the skills then to obviously prop trade for the rest of your life, but you also have skills to trade your own account for the rest of your life. That's what this is really all about. I love the idea of trading as a concept for people, as a skill set, as an ability to actually get away from what I'm about to show you. And I've showed these screens before, but I have a few new ones that I kind of want to share with you. Those of you who are new and are coming to the market probably have been fed this very, very wonderful myth that says, hey, all you have to do is just save money every month, put it into the stock market, and it will grow by itself. You don't have to do anything else. You'll become a millionaire just by putting money every single month into the stock market. So that's more true than it's not, but it's true only like 50 years forward. A good example of trying to understand just how difficult this process is and how utterly disappointing it could be is if I told you, I'm going to guarantee you, not expect, project, predict, I'm going to guarantee, 100% guarantee that if you give me $1, I'll turn it into $1 million in 20 years. So that means I have to double your money every year. That's incredibly, incredibly difficult thing to do, right? So I'm going to guarantee you this, right? And I'm going to ask you, so, okay, I've guaranteed you this incredible return. You give me $1, I'll make you $1 million in 20 years. And I'm going to ask you, given this guarantee, how much money will I have made you after 15 years, after 75% of the life cycle of this plan? How much money am I going to make you? And the answer is incredibly disappointing. It's just $32,000. So 3/4 of your lifespan of saving essentially produces nothing. And this is remember, this is me doubling your money every single year, and it still produces nothing. Basically, when you look at compounding streams of investing, 97% of all the benefits of compounding come in the last 5 years of the investment cycle. So I always give this example of Jack and John. So John is like this very, very responsible young man. He doesn't drink, doesn't smoke. He gets 8 hours of sleep every night. He's a good person. He saves $500 every single month out of his paycheck. And for the first 15 years of his life, he's just basically invests into the stock market, and he works at a nice, quiet, $50,000, $60,000, $70,000 job, blah, 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 right? And then there's Jack, who's basically, a ne'er-do-well who does nothing for a living. A lot of times, just is unemployed, drinks, smokes, has all sorts of bad habits, but he's a charming guy. And eventually, 10 years after college, they both graduate from some college. 10 years after some college, he kind of comes up across some business idea. He charms a few people into giving him a little bit of money. He opens up this business, and because he's a charming guy, the business takes off. And now, it's not like Jack is super wealthy, but now Jack's got like $50,000 of excess income, so more money than he really needs to spend for his dissolute lifestyle. Here's the absolute tragedy of all of this compounding story. So if Jack drops $50,000 into the stock market, while John's been sitting there saving $500 at a clip all these years for 17 years, Jack will make more money than John just by leaving the stock market, because he will have $50,000 to start with, while John is at 32 all that time. And in the last 5 years, they're both going to compound and run. So that's sort of, I think, a really, really interesting point in trying to understand that the compounding story is a lot more difficult and a lot less attractive than it seems. Furthermore, when you think about the market, and it's certainly over the last, 10, 15 years, this has been really, really true. Go up and never stop. Everybody just thinks every year the stock market goes up and up and up and up. Well, the truth is actually quite different. if you look at the stock market returns, this is from 1950, courtesy of Barry Ritholtz, my buddy Barry Ritholtz from Ritholtz Wealth Management. This 1950, the S&P compounds at 9.3%, right? I mean, it looks really, really good. If you bought 1950, you sure as heck would have, made a lot of money, right? It's a very, very, very attractive path of return. However, when you look underneath it, right, every single year from 1950, what you see, this is every year from 1950, you see many, many years where you're losing 40, 50, sometimes even 60% on the P&L because underneath it, some years do better, other years do much, much worse. So one of the things that we tend to do as human beings is we like to project everything forward in a nice straight path, when in fact, the reality of life is that there's a huge amount of bumps in between. It's only at the end of the journey that you may be looking good. But in the meantime, it could be so volatile and so bumpy that you may just simply say, I got to get off the ride. I can't take the volatility. And that's what happens to a lot of people. So not that many people arrive at the end wholeheartedly. You almost have to be like Rip Van Winkle, completely oblivious and ignorant of anything that's going on and just kind of stupidly go forward and hope and pray, have faith that at the end of it, you're going to be successful. So day trading basically is the art of getting rid of this bumpiness, getting rid of this incredible, up and down, up 1 year, 50, next one, down 1 year, 60, not leaving yourself to the mercy of the markets. Day trading is the idea of trying to get consistency from the markets rather than getting a lumpy game of uncertainty. So what you're trying to do in day trading is create a steady stream of income. Now, you may think that that's crazy, Boris. How does that possible? Well, it's not only possible, but it's actually absolutely proven. High frequency firms like Virtu Financial. Virtu Financial is one of the two biggest high frequency firms in the world. It just happens to be that it's the only one that's public and therefore had to show, open up the kimono and show its actual performance to the world because they went public. The other firm that's high frequency is Citadel, which is even more profitable than Virtu. But the bottom line of the whole story is that when they had to show their public numbers, it was revealed to like the absolute consternation of the world. People just could not believe that this was true, but it is. They lost 1 day out of 1,238 days. It was like a 99.97% win rate, right, on a high frequency basis. So the first question is it luck? Of course it's not luck. You can't have luck over 1,200 samples. You simply can't. It's the statistics of that are less than infinitesimal, right? It's the equivalent of you and I coming to a basketball court, or it's the equivalent of you and I coming to a soccer field. Let's be international. Coming to the midfield in a soccer field, and then scoring a goal every match from midfield in 1,238 games. Is that luck? No, it's not luck. Only Pele, maybe Ronaldo. Who else could do that? Maybe Messi. Maybe Messi could do that. No. Oh, who did that just the other day for Bayern Munich? Harry Kane. Harry Kane did that like from midfield, right? So yeah, my point is it's not luck. It's impossible to achieve that in luck because that is an incredibly high level. And the reason why they do this is obviously because on a day trading basis, there are many, many, many ways to handicap the market that are far less, I don't know what the word that I would use. They're just simply far more predictable. I know that sounds crazy, that it's much more predictable to be on like a 1 minute chart than to be on a 1 day chart. But if you think about how on a day-to-day, minute-to-minute basis, right? On a day-to-day, minute-to-minute basis, human behavior really changes very little, right? But even on a daily basis, certainly on a weekly basis, certainly on a monthly basis, nobody knows what the hell is going on. I mean, look at the last week of in the stock market, right? I mean, it's absolutely crazy. You have Facebook coming out with beating the numbers, 20 PE, great company. TikTok may get banned in the US, which means Instagram gets all the benefit. They're getting more and more views. they're doing great, right? They're doing great. They come out and they say, oh, we're going to spend a little bit more money on AI, basically to make the product even better for the world. And the stock gets pummeled, loses the greatest amount of capitalization ever in the history of the world, even though they're producing so much money, they don't even know what to do with it, right? Tesla comes out, worst numbers ever. They're bleeding cash. They're actually negative cash flow. Nobody wants a Tesla. There are literally pictures all over the world of parking lots full of Teslas. Nobody wants a fucking Tesla right now, right? But they say, oh, we're going to have self-driving cars, which they won't, because they haven't. They're competitors of theirs that are doing better than they are that haven't been able to achieve it. It's impossible. It's impossible to create a self-driving car, right? They just basically lie for a living, and the market goes, oh, let's run it up 20%. This is the difficulty of long-term forecasting. You can be completely correct about all sorts of things, but you can be completely incorrect as to how the market reacts. Or you could have some crazy stuff happen geopolitically, or you could have some crazy stuff. I mean, we all know in the US, for example, we're all basically one breath away from not having any candidate for presidency, before the election goes, right? It's a completely reasonable possibility given how old both candidates are in front of us, right? How are you going to project the stock market given that uncertainty? So the point is, going forward, long-term projections are actually much more difficult in some ways, or from a trading perspective, than short-term projections. That's my key point about how guys like Virtu Financial, on a much shorter time frame, are able to be so incredibly productive. Now, the key thing that I want to talk to you a little bit about today is that we work on a short-term time frame, right? And I will, in a few minutes, I'm going to disclose to you my trading methodology. I'll show you the way we trade, and then I'll show you the actual charts that we trade with. But we have one other trick up our sleeve, which you may like or you may not like, and you're perfectly okay not to like it. And I'll show you a variation that doesn't follow this method. But I want to just have your mind open to something that may seem really, really distasteful to you. Okay. And that concept is multiple entry. What I mean by that is, in our structure, if we enter a trade and we get stopped out, we do not use that as our terminal stop. We don't use that as our finite approach. We say to ourselves, okay, we got stopped out. We're going to wait for the next construction of the setup. The next time the setup occurs, and we're going to double our position, right? We get stopped out, we're going to double again. We get stopped out, we're going to double again. We go four times. So we do progressive betting, martingale, all sorts of names that you can call them that are very, very dirty names, up to a limit. Again, always up to a limit. But I want to explain to you why we do this. I want to run you through the math and just have your mind open, and then I'll show you a couple of actual runs that happen. But if you don't like it, don't worry. I will have a different approach for those of you who don't want to use this approach that I've been using actually myself on a day trading basis, that I think you'll find even more palatable. But this is a very, very interesting idea that I like to share with everybody, because it seems so bad, and yet it is actually so good. So the basic idea here is, assume we have no edge in the market. Like, we know nothing. We assume that every single trade is a 50-50 bet, right? Buy, sell, it doesn't matter at any point in time. Maybe you're going to go up, maybe you're going to go down. It's a 50-50 bet. So the question then becomes is, okay, if I'm just going to randomly trade, what are the odds that I'm going to lose 5 times in a row, right? And the odds are, mathematically, you multiply them out. It's called conditional probability. 1/2, 1/2, 1/2, 1/2. And so to hit 5 heads in a row, or to hit 5 tails in a row, it's 1 out of 31, right? That's 1 out of 31. That's a 50-50 even bet, right? Now, This is a chart that I love to show all the time because it's a chart from Crestmont Research. And what this shows you is the stock market performance on a daily basis, right? So in recent, for example, if you look at this quadrant over here, in recent years from 18 to 23, this shows you that on a daily basis, how many days did the stock market close up? How many days did the stock market close down? In 2018, it was 52 to 47. In 19, it was incredibly skewed, almost 60 to 40. 20, it was 57 to 42. 21, it was 56 to 43. In 22, oh, it was interesting. 22 was the one bad year, was 43 to 57. And in 23, it was 54 to 48, right? So we had just literally one bad year over the last 5 years. If you look at the decades, when you aggregate like how many days across a decade were up or down, what you see is like 51, 48, 53, 47, 53, 48, basically kind of a 5% difference, sometimes a 6% difference, sometimes a 7% difference, sometimes even a 10% difference, a really, really huge edge. But regardless of how you see it, this is the reason why the stock market goes up. This is what's called upward drift. If this didn't occur, you would never have the Dow Jones Industrial Average start out in 1970s at 700 and trade at 40,000 today, right? You couldn't be that way because you need to have an upward drift, which means you have to have more up days than down days. Just a very, very natural common sense thing. But what's interesting here is the spread. I just want you to see that over a long, long, long term, it's essentially kind of like a 53-48 spread. Sometimes it's even 55-45 spread. It's, these are big, big spreads to the upside, right? So if you were to assume that you have no edge, but that there is a 55-45 bet to the upside, basically that the stock market is kind of a more of an upside driven market, right? What are the odds that you would lose 5 times in a row? Well, those odds, when the odds shift to one direction or the next direction, is actually 1 out of 52. So remember, if it was completely random, it'd be 1 out of 31. Now it's a 1 out of 52. If you subtract 52 from 31, you basically get about positive 20, right? You get 20 positive wins that are not factored because the market is assuming it's a 50-50 bet, but the real bet is 55-45, which means the market is overestimating the amount of longs that will hit and underestimating the amount of shorts, right? So if you sort of do this kind of a probabilistic progressive betting, you're pretty much assured. Now, again, nobody's assured anything, and all these odds shift. This is just a mental model. This is just sort of a mental model to show you, but it's a mental model to show you why, if you use progressive betting in a generally upward drifting market, you have a natural predilection to profit, right? You just have a statistical edge to simply do this profit, right? And that is, how things pretty much work, right? Now, I'm going to sort of show you. So let me kind of stop right here. Let me see if there is if there's any comments here. I'm going to put on my glasses. Look at the comments. Okay, is anybody have any questions about what I just sort of showed you? Right? Everybody kind of understand the basic mental model that I'm trying to work with you, right? I don't see any comments. So I'm going to proceed and kind of talk to you a little bit about the scalper model that we trade. So the foundational day trading technique that we use is called scalper, right? And the rules for this set are kind of very, very simple. These are rules for gold, right? That I'm going to give you, but they're rules for any instrument. I'm just they're basically kind of a primary idea. So we're trading this around the clock, and the critical thing here is we are looking at the 1 minute chart. We're looking at the 1 minute chart. We're trading the 1 minute chart, and within that 1 minute chart, we are trading the 8-period SMA, the 8-period SMA. And we're looking at certain points on the chart where the price stretches away from that 8-period SMA by at least 7 basis points. 7 basis points is 7/100th of 1%. Doesn't seem like it's a lot, but it's a lot on a 1 minute basis. So basically what you're looking for is price to really stretch away high or low, up or down, away from the 8-period SMA, right? We're looking for those extensions really, really far away. And then we're going to decide how we want to trade off that chart, right? But the most important thing that we're really looking for is for price to recapture the 8-period SMA. Now you're going to ask me, what's so special about the 8-period SMA? And the answer is absolutely nothing. Absolutely nothing. It's as random as everything else in the stock market. What it is basically is simply a short-term structure. It's a little bit less than 10. It's a little bit more than 5. It's just basically a platonic compromise. It's just a platonic compromise. You can use 7. You can use 9. You could use 10. It's really less important, the number, than the essence of the idea. It's a short-term, simple moving average. All we want to do in life as scalpers is be buying when the price is above the short-term moving average and be selling when the price is below. We just want to be in sync with a short-term moving average of the stock market. Okay? That's literally all it is. Our job is to be on the right side of flow. If we're on the right side of flow, we've achieved a huge path towards profitability. Now, the critical thing here is right side of the flow just as it occurs. In other words, we don't want to be buying way above the 8-period moving average. We don't want to be selling way below the 8-period moving average. We don't want to be buying or selling at the extremes. We want to be buying just where the average is starting to, just as the average opinion of the market is starting to get bullish, we want to get long. Just as the average opinion of the market is starting to get bearish, we want to get short. That's extremely important. There's 2 components to what we do, which is be on the right side of the short-term moving average and then be as close as possible in our entries to that moving average. That's the true essence of technique, because that's where your risk reward is best. The irony of the whole thing is being average is really profitable. You want to be near the average, and then you want it to explode away from the average. Because think about what trading is all about is you're near the average and then explodes away from the average in the direction that you want it to go, right? You're near the average and then explodes down away from the average that you want it to go. That's all it is. As long as you're positioned right and you're with the crowd and the crowd is going to just lift you up or take you down, you are in great shape to win the trade, right? That's literally all it is. Everybody follow me on that? Everybody understand this? I'll show this to you with our indicators in just a bit, but I just sort of wanted to share this with you, right? So everybody kind of getting this idea, and then then we trade with stops and targets. This is a particular stop and for gold, which actually I'm going to change with you, but I want to show you. So I think it's much easier for me to show you the whole essence of this. And right now, let's do this. This is actually US 30, right? This is a CFD product. But since we're talking futures, let's put ourselves on the futures product. And I'm going to show you, this is our Super Scalper 1.6 version. I'm going to, just bear with me a second. I want to make sure that I have everything correct. Labels I have. So I'm going to choose the YM basis. And you're going to see all of these pop-up labels. These pop-up labels are actually trade triggers. Okay, so right now I'm just showing you the Dow Jones Industrial Average, which is not something that a lot of people in the futures trade, but a lot of people on the CFD side trade. But it's easy to kind of trade it, to show it in both directions. I'll also show you NASDAQ. I'm happy to show you gold. Each one of these instruments has a little bit of a different stop and a target, but the basic methodology, the basic philosophy is exactly the same. So what you see in this particular scalper strategy, first of all, if you wanted to see kind of the analytics, the longer term analytics of the what's going on over here? Oh, there it is. It took a while to show up. This particular indicator has a whole bunch of analytics built into it, in addition to just giving you trade signals. This is something I wrote myself. This is something that is 100% available to anybody who's in our BK BK group, and I'm happy to share with you guys. And this is obviously something that a lot of people who use the prop test, who try to use, who trade the prop test, use in order to pass the prop test. So this scalper strategy, which is the one that we use, our bread and butter ones, has a whole bunch of analytics that you can look at, and then you can make them go away if you don't need them. So in this particular case, it tells you the high, the low, the range of the day today. So today is a very, very quiet day, actually. You see it's 68 basis points, which is 0.68 of 1%, right? 1 basis point is 1/100th of 1%, or essentially 0.01%. So 100 basis points is 1%. 68 basis points is 0.68. That's not a big range for the Dow Jones. Usually a really great trading range is somewhere at 1% or better. And it's normal because today we are a day before the FOMC. Tomorrow is going to be the Fed. They're going to, he's going to create lots of volatility. It's very likely it's going to be much, much wider then. And it's going to expand now. So today is a quiet day, and it's sort of showing it to you. The other thing this kind of shows you is where is the direction of the 1 hour trend. You see, the 1 hour trend is what we'll call a dumpster fire. It's bearish. If the 1 hour trend was bullish, it would have a rocket behind, like a rocket ship. It'd be bullish, but it's bearish, and it's been bearish for about 11,000 1-minute bars, quite a long time. So the markets are kind of turning over, right, on a longer term basis. But we don't even care about that. We don't even care, where the long-term trend is. It's interesting for us. It's useful. Maybe you have some biases that you want to trade with on a longer-term basis, but it's not necessary to succeed. Because if I delete this table, right, and I just simply trade in the way that I'm going to show you. So what you see here is I can do buys only. Let's say I'm only bullish, and I only want to show me buys. If I'm only bearish, I only want to show me sells. Or I'm going to trade bi-directionally, which is the way I like to trade. I'm going to trade this system bi-directionally. And in the Dow Jones Industrial Average, for this particular template that I created for the chart, you're trading with a 40-tick stop and a 32-tick target. So it's a little bit, your stop and target are a little bit not one-to-one. They're a little bit less. In order to make sure that you win as many trades as possible. So I have a little bit of a negative risk-reward ratio, like about a 75% to target risk-reward ratio. And in this particular structure, right, I have it set up so that, if it goes to 4 levels, like this is an orange level, this is a terminal level, right? It stops out. It means that if I lose this, I lose 15 times, my risk, right? If I lose 15 times my risk. So today was kind of a choppy day, and I actually did get clipped here at a 40 tick level for negative risk. But what happens in the meantime is that if I keep doing this over and over and over again, you see every one of these green labels, that is a positive trade, right? And if I can just go a couple of days without getting stopped out for a negative risk, right? Guess what happens? I make much more money than I lose. So if, let's imagine a situation where I'm trading 3 straight days. Every single day, I'm going to pretty much be making about 10 or 15 winning trades, right? Each one of these trades is a winning trade. And then maybe on one day out of 3, I'm going to lose 15. So I'm going to be plus 45 minus 15 plus 30 on an ongoing basis, right? And I'm showing this to you right now as I'm going back through the charts. I could even show this to you right here. You can see how you see all these green trades. But I don't want you to take my word for it. Because what I did, which was a lot of fun, I did this. This was so much fun. I went away last week to Cancun, right? And I said, hey, I'm going to put this strategy on a complete and total 24-hour auto trading process. I'm not going to interfere once. Let him take trades. Let him stop. Let's see how it does. Let's just see how it does. And what I did is the exact same setup I showed you, but I traded the NASDAQ and the Dow Jones, just round the clock, $100,000 account, right? Left it alone, and I'm literally like, I was just literally watching my phone, just enjoying all these trades. And first of all, the trades were going off all the time. You couldn't even do this. You couldn't do this manually if you tried. But I was just curious. I was like, okay, prove to myself that the progressive methodology that you have actually produces net positive. So I just want to show you. I'm not kidding. This is my effects. I uploaded the number. I started actually at 100,000, and it went up to to the highest 116. But I stopped at a 115 about 3 days into my journey, because I was like, this is great. It's working. I'm happy. When I come back again, I'll restart it. What's astounding about this is how unbelievably profitable it was. It did 198 trades, right? Now, obviously, of course you're losing. But the point is, and I even had one bad trade. I even had one full stop out in the thing. But by basically winning over and over and over again, and this is every single sheet here is 20 winning trades. Now, each trade here is actually, 30 points or 20 points. They're not, you win $2,400, but remember, you have lots of losses before that. Like the first trade is a loss, the second trade is lost, third trade is lost. So this is not growth. This is not net profit. This is just gross profit, against which you basically have to understand that every time you see a green trade, it's actually net at around 300 or 200, depending if you're trading NASDAQ or the Dow. So when you go through this, look at the amount of sheets, look at the amount of greens: 20 trades, 40 trades, 60 trades, 80 trades, 100 trades, 100. So we're going from backwards: 1, 2, 3, 4, 5. So that's 15. So 115 positive trades, right? That's how you get to 10,000 on 100,000 in 3.5 days, right? Yes, you're going to take losses, but all those losses get washed away in all those multiple winning trades. And remember, these winning trades are not even fully paying for the losses, right? They're only paying 75 cents for every loss. But because there's so many multiple of them, and because you're able to do this, the point I'm trying to make here, guys, is not that this is the nirvana, this is the greatest thing. It's a great strategy. It's definitely going to go on my perpetual trading. And if you come join me at BK and pass the prop and some of the other strategies that we do, I'll be happy to show you how we can set this up. The point I'm trying to make here is that inherently, this scalping idea has an edge, because it's basically, this is manifesting the day-to-day trading that we're doing, just staying true to the trend, right? So that's all that we're doing in our trades every single day, depending on how we're trading. Now, I'm going to show you a little bit, perhaps maybe more palatable way of trading, and one that we do on an intraday basis all day long. Let me see if I have the. Hang on just one sec. Bear with me. Let me see if I can show you. I know I did trades here. Let me see if I'm. Oh, I know why. Hold on a second. I'm not logged in. Let me log into my account. I want to show you my account. Why is this not letting me in? Oh, because it's on my other account. Sorry. Let me log out of the other account. Just bear with me one sec. It doesn't allow me to do this unless I log out of the other account. Log out, Tradeovate. Okay, let me see if I can log in here. What's going on over here? Why is it not letting me do this? Oh, that sucks. Just one sec, guys. Bear with me. I'm logged out. What do you want from me? Oh, maybe the other one. Sorry. Okay, sorry. One more. I have to log out of all my accounts. Maybe I won't be able to do this with you guys live, but I wanted to just sort of show you my trades earlier today on the actual chart. But I'll just go through with them, and I'll explain to you exactly how we like to trade. This was gold, right? And in the gold, like, I love to trade gold really, really well. Now, gold is in a horrible, horrible decline today, right? Everybody sees gold is like just completely in a massive downtrend. However, it's been a huge uptrend trade. And I'm going to show you how I was able to make money in gold without ever making a single selling trade, right? There's a couple of ways that you can do this. One way is the way that I sort of showed you. Every time gold recovers the 8-period moving average, right? You can go long here. So you would go long here. Now, the critical thing here is if you don't want to use martingale or progressive betting, right? The way I scalp on a day-to-day, intraday basis is, and again, swallow your breath before I tell you this, with a 1 to 3 negative risk reward ratio. So in gold, I am willing, whenever I get this set up, to go for $1 and risk $3 of stop, right? So that means I got to win 4 times I gotta win 4 times out of 5 to be net positive. If I win 4 times out of 3, I'm breaking even, right? So I am actually, what I'm trying to basically tell you guys is that I win 5 out of 6, very often 6 out of 7, sometimes even 9 out of 10 during the day, as long as I'm picking the spots properly. And I'll show you how I pick my spots properly with gold, for example, and then I'll show you how I trade the S&P and the Dow as well. So if I'm going to be bullish biased gold, right? There's 2 ways I can trade it. I can trade it where I can look at my charts, and you see this red candle is telling you, oh, price is really stretched away. It's stretched away from the moving average. It's really, really kind of oversold, right? So the easy way for me is to simply wait and say till it recaptures the 8-period moving average right over here. I get long over here, and I'm only looking for $1 trade. So 22.6, I'm looking for 23.6. It's actually goes $2. Now, here's the thing. Very, very often, it will go much more than $1. Sometimes it will go $3. Sometimes it will go $4. Sometimes it will go $5. Sometimes it will go, even $10 up, right, on that trade. And you're like, oh, you only took $1 out of this trade. So the answer to that is, the reason I do this is because I am looking for that 90% accurate trade. If it's going to go up $5, it may do that only 20% of the time, but it will most likely go only $1 up 90% of the time. And that's all I'm looking to do. I'm looking to capture as many frequent positive trades as possible in this particular scalp methodology without ever having to lever up, without ever having to increase my size, without ever having to do any kind of martingale structures, right? Sorry, I'm noticing that I'm actually off screen here. I got so close to the screen that you don't see my face. I got so excited. Anyways, the point is, that's one way, easy way that I scalp, but I have even a better way of scalping. The better way of scalping that we have is it gets totally oversold. We wait for the first white bar, the first bar that's not oversold away from the moving average, and I get long over here. And my probability of making $1 here is even higher. Where I have a 1 to 3 risk reward ratio is even higher, right? Look at just sort of like, let me just sort of run you through, let me just mark this up here on the charts and how many wins I could have had. Win here, win here, win here, because all I'm looking for is $1 trade. Win here, right? I think this is probably going to be $1 trade. And this is all against literally the single worst environment I could possibly think of, because I'm coming in here at 17. Yeah, it's $2. Every one of these is like at least a $2 move, right? So it's 1, 2, 3, 4, 5, 6. Even this, let me show you this. I think I survived this particular trade over here. Let me move this over. So if I'm coming in over here, I'm buying 14.5. My stop is going to be, totally survived this. I have a $3 stop. This is why you have a $3 stop. 14.5 on the buy side, 11.5 is my stop. All I need to do is 15.5. I'm done. So I'm like 6 trades. It's 7:45 to 9:15. I've now made 6 winning trades. Let me explain to you the power of that on a prop trading system. So I have a $50,000 prop trading account. I'm going to trade just one regular gold contract. $1 up is $100. $3 stop is $300, right? 1 to 3. In this little cycle, which I've never looked at before, in my life, I just literally, this is the first time I looked at it with you guys. I just made $600 in what? Half an hour, 45 minutes, right? I'm done. You close up shop. Now, with a firm like Apex, all I need is to make $3,000 to get the fully funded $50,000 account. So if I spend 45 minutes to an hour, during prime trading hours, scalping this methodology, and I have 5 consecutive good days, I am done. I'm done without ever taking huge risk. My biggest risk is $300. I have a budget of $2,500 of losses on a drawdown. I'm never even come close to that, right? Now that's just gold. Now, what if I were to add the S&P, my favorite, the thing I love to trade. I love to trade this thing. And I know it's crazy. I trade this with one S&P point, $50 against 3 S&P points, $150. That's even a smaller risk. That's a tiny risk, right? But look at this. Boom. Thank you. Thank you, ma'am. Wham, bam. Thank you, ma'am. Boom. Thank you. Boom. Thank you. Right. This is the one loss I would have had over here. I got it clipped. It's actually, sorry. So over here we have like a really, really, really bad negative sell-off in the against the we had news today. Sentiment was really, really horrible, and I was actually absolutely not bullish the market. And I certainly, the point is, I wouldn't have been buying like a madman all the way through this. The setup here is great after the news has been released and all the bad news has kind of happened. Like this was the first piece of bad news. After that, I had a couple of good wins on that. Now you have a fresh piece of bad news. Now is when I would come in and start buying right now. I would have bought it. But even if, let's assume I got clipped on one of these things, I'm still up 1, 2, 3. I get clipped on 1, 4. Okay, I'm break even. I still have like 2 or 3 more hours to kind of trade the S&P, and I assure you, it will yield me a couple more, and then you add the gold to it, and now I'm up $600-700 in a day in an incredibly low stress-free methodology of trading on the worst possible day. I'm doing the single most difficult thing today, which is trying to go long the stock market into a negative trend. Right now, you don't want to go long the stock market into a negative trend. Be my guest. You can trade this the other way. You could say, hey, you know what, Boris, you're an idiot. You have this long bias, but today the market is really selling off. It's you can see everybody's not feeling that great about the economy. Why are you even like bothering trying to get long on these things? No problem. You want to get short? Look how easy it is to get short in this methodology. You go to the other side. You say, okay, I'm going to look for the overbought candles, the green candles. I'm going to look for the first candle that stops the overbought condition. In this case, over here. So I'm going to go. Let me just mark the chart over here, right? I'm going to sell this with a 3-stop, 1 target. Boom. Wham, bam, thank you, man. Sell this 3-stop, 1 target. Wham, bam, thank you, man. Boom. Okay? I'm going to sell this over here. Yes, surprisingly enough, I'm actually going to make money on this because here it is. I'm selling this over here. Just 1 point is more than enough for me to make it because I'm selling it around 34.75. I just need 33.75 and it comes into 33.25. So I just make 1 point here. I'm going to make 1 point here. So now I'm 4 to the good on the short side, right? I can do it both ways. It's totally immaterial to me how I want to do it. Or if I want to be a little bit more sort of confident in my negativity, I can just simply sell the moving average. It crosses the moving average over here. I'm going to sell this over here, get it done. I'm going to sell this over here, get it done. I'm going to sell this over here on the moving average, get it done, right? Now, you will not go every day without a loss. But what you will do is you will go 5 wins, 1 loss, 6 wins, 1 loss. Maybe even sometimes on a good day when you're totally in sync, 7 wins, 1 loss. And even on a bad day, where, you're going maybe sometimes, 6 wins, 2 losses, you're basically net even. You're not really putting yourself at a huge risk. Not every day is perfect. Not every day is good. Today is one of the worst days to trade because there's no directionality. The market, really is doing nothing. It's kind of selling off. Frankly, it looks like it wants to tank into the close. There's kind of two possibilities here. Either we're just going to drop like a stone. I have a feeling that they want to test the 5,100, and if they can't hold it, it's probably going to be selling off into the close, for the rest of the day. But you can never discount like a squeeze rally at the end. The key thing isn't about worrying about where the market is going to be perfectly. The key thing is to be on the right side of the market in a short period of time. Give yourself an hour of two trading. Like right now, it's going to be, it's nonsense. From 11 until 1 o'clock, the market is going to do nothing, right? It's in lunchtime. There's going to be another burst of directionality after 1 o'clock, which is going to be very tradable. But the burst of directionality here, these two very productive hours, you picked up. If you did gold and you did the S&P, you picked up like 200 points in the S&P, 600 points in gold, right? If you wanted to do this in NASDAQ, right? You want to do this in NASDAQ? Again, you could have traded. NASDAQ to me, I always like to be. I know NASDAQ is. NASDAQ just generally is a long bias trade. I just love NASDAQ as a long bias trade in the worst case scenarios, right? Because it's just one of those things that just always wants to go higher. Now NASDAQ, I'm going to trade with a 510, so I'm going to get long here with a 510. It's 21. Boom, I'm done with a 5, right? I'm going to, it goes below the moving average, above the moving average, another 510. Below the moving average, above the moving average, another 510, right? Over here, I wouldn't have taken this trade only because, now this is not a bad trade, but remember, look at what I said to you about, I don't want to be too far away from the moving average because it's all about getting ahead of the skis, right? Getting too far ahead of the moving average. Even though this trade would have worked, it was just too far ahead. The retrace risk was really strong. On the other hand, this is very close to the moving average. Boom, I'm in there here. Close to the moving average, 510, I'm in there, right? I've just gone through like literally 10 trades, $100 on NASDAQ, $300 to the downside, and I made $500 on NASDAQ. If you want to be like a, balls out, I want to pass my evaluation test in 5 days, trade it without ever incurring any serious risk of blowing out, all you do is NASDAQ and gold. 100 up, 300 down, make 5 trades there, 5 trades there, you're up 1,000, 3 days of that, and you're good to go. Super, super simple. Super simple. I'm not using Heikin-Ashi. Heikin-Ashi are not real candles. Remember, these are just regular candles that I've colored myself. They just simply have a coloring that tells you, okay, you're extended over the moving average or you're extended below the moving average. Nothing here you see is anything, but these are all off the shelf, absolutely the most basic of instruments to use. They just simply used in a way with my methodology and my structures to kind of optimize your entries and your exits. That's what I'm doing. That's all I'm doing. I'm just using the simplest techniques. It's like Italian cooking, the greatest cooking in the world, right? Why does everybody in the world like Italian cooking? Because they use like 5 ingredients. They're all super fresh. They know exactly how to mix them, and it's done. That's why it's the greatest food in the world. You don't have to be complex to win, right? So no live trading today because I'm talking about the strategy, and I wanted everybody to understand the strategy. I will be doing live trade action tomorrow. When trade tomorrow is going to be another crazy day because it's pre-FOMC. I don't know how much price action we're going to do, but we'll try to lay down some trades tomorrow. But today, I really wanted everybody to fully understand the methodology, right? Why do I always wear black? Oh, you sound like my wife and my daughter and every woman in my life. I wear black because it's simple, my friend. Because I'm a guy, okay? Because I am the definition of a Neanderthal man. I could give a flying F about fashion. And if I have 1,000 black sweaters, it requires 0 mental effort on my part to dress. That's why. That's the answer. So, as I said to you, doubling up on the trade, it's basically 1, 2, 4, 8, 8x maximum. And then if you lose that trade, it's a minus 15 on the whole position. You lose 15 R's. An R is the element of R is 1 single unit of profit. You lose 15 profits, right? And as I showed you earlier on the large multiple, and frankly, the reason why I don't want to go deeply into that particular strategy is because that's something we talk about in BK. It requires lots of knowledge, lots of coaching. I have a special, coaching section that you can use, and I don't want to confuse you on it, And it's also not the methodology that I think is good for passing the prop. That's why this 1 to 3 methodology that I just showed you, I think is a much better, much more sustainable. This is what I use right now to pass the prop. The other methodology is excellent for running your own account. Like once let's say you got funded in prop, you made a lot of money in prop, you want to set aside your own account, or you have your own account and you want to trade 10,000 on that. I'm gonna load this up onto my own futures account, my personal futures account, and run that continuously, very happily on the continuous basis. But for passing the prop and then keeping the prop and then collecting money from the prop, this is a much better way of doing it. Where you just simply do a 1, 2, 3. Commissions are absolutely no concern to me. This is the beautiful thing. It's the greatest thing about prop. Who cares? They're built into my prop P&L, right? It's not like I'm trading my real account where I have to pay tons and tons of commissions. The commissions are built in. So so what? Some trades are eating up a lot of commissions. Net, you're still ahead, right? The point is, as long as you're net positive on all your trades, you're well ahead. And by the way, if you're trading the big account, the commissions are really only a big eater of the P&L on the micro accounts, because the micro accounts commissions are actually much more expensive relative to the size of the micro account. On a mini account, they're nothing. They're like one tick on the commissions. When one winning tick on the commissions pays and makes. If you one tick on a mini account, you are net positive with all commissions included, right? So not really a big deal. But that's the other reason why I love prop. This is something that people don't quite appreciate. Is that so? Here's somebody was asking me, would I be looking for kind of a live trade? I'm not going to live trade with you today because I got to go. I have a meeting. But like right now, this is NASDAQ. It's kind of recaptured the moving average. I'm waiting. The other thing that you sort of want to understand, and I'll obviously explain this in my classes, I'm waiting for the candle to actually close. There's 3 things, like with everything else, when the chef tells you how to make a meal, they give you the recipe, but they don't give you the techniques. There's always techniques, right? And the techniques you find in my trading room. The little differences between winning and losing are always in the techniques. You get the recipe, but you need the techniques to really make them work. Part of the technique is the candle has to close. You have to wait for it to close. You see, it didn't close over here above the moving average, therefore no signal. I wouldn't have taken the signal, wouldn't have been a trade. I needed to close through the moving average, then I'll get long for a 515 target on the NASDAQ, which would be 100, 300 on the trade. Okay, these are all little tidbits of information that I'm more than happy to share with you guys. If you guys want to come hang out with us, if you want to, most importantly, if you want to take the Apex eval, you are going right now. They're running an 80% discount to their structure. Let me just go back and just kind of show you. Hang on a second. I want to go to full screen and just show you everything that's going on with Apex. So this is sort of my structure when things are good. This is what happens, by the way, on a good day. On a good day, you literally printing. I mean, this was insane. I was printing like literally 5, 10, 15 consecutive winning trades. When the trend is your friend and you're just going with the trend, boom, 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 boom. It's super sweet. Today is a horrible day and I'm still making money. That's the beauty of a really robust strategy. Is a really robust strategy makes money when everything goes its way, makes a little bit of money, or at very worst just kind of breaks even, or at very, very worst loses just a little bit of money when things go absolutely against it, right? That's a definition of a great strategy. That's what you want to have. And Scalper is absolutely it. It's absolutely that kind of a strategy. So putting Scalper together with Apex, what's really great about this particular offer, and this is a lot of guys in my room have done this. You have literally until today, you have to use the word BK save, right? Make sure you use the coupon code BK save. Let me just get rid of this. Can you see? Yeah, sorry. Use the word BK save before 5 o'clock today. So if you want to lock down this thing, it's awesome. But here's how you do this intelligently. Buy 5, buy 10. If you buy 5, basically this is like for the price of 1, you can get like 5 of these things, right? You get 5 accounts. If you buy 5 accounts, right, you don't have to use them all right away. You can start them, staggered, right? But the beauty of it is you can experiment with one on one product, experiment with another one with another product, or experiment on one with the really large size. You can say, Boris, you're a wussy. You're trading one little contract. You're trading for $100 a trade. I'm going to trade for like, $500 a trade, right? I'm going to trade for $500 a trade, or I'm going to trade for, maybe $300 a trade, right? $300 a trade. I'm going to risk $900. I have $2,500. I'm basically going to make a bet that I'm not going to hit 2 negative trades in a row, or not three negative trades in a row. If I'm going to hit like 4 or 5 winning trades at $300 a trade, 2 days, I'm done, right? So you could juice up your approach depending, because you have so many accounts and you have so much flexibility. That's the beauty of it. Now, once you pass the test, you absolutely have to go down to my size. If you want to keep the money, you got to trade small. But I always say the great thing about Apex and the great thing about prop trading, Apex especially, because they're so flexible about this, is you can really gear up your approach in the evaluation phase and just get it done. And then you have the real account forever, as long as you know how to keep it. And you just keep it by trading small size. If you keep it trading small size, but get it by trading large size, that's the secret to having more than one. I have guys who have like 5 or 6. One guy, I think he had like $700,000 of funding by just doing that. He just levered up, and now he's trading small and using all that excess capital that's at his fingertips to be able to basically trade up all that money and collect commissions every single month. So I encourage everybody to give it a try. If you've never tried it, I think like if you do a $50,000 account, right, at 80% off. Don't quote me on this because I don't remember the exact numbers. I don't think it's more than $35. I don't think it's literally less than brunch at my New York City diner. Not even a nice restaurant, just my freaking New York City diner. Welcome to the place. So it's less than that, and you get $50,000 to trade with. All you got to do is make $3,000. You have, you can do it in a month. You can do it in a couple of months. But if you do it in a month, that requires nothing. That requires basically $200 a day, right? Like, let's say there's 20 trading days, $200 a day, $4,000, right? I just showed you how I made $800 in gold in an hour trading my strategy. So it's feasible, completely feasible, using this indicator to do this. Now, if you want my indicator and you want to come hang out with me, come hang out with us at BK Traders. The code here for this is, I can give you Boris Trading. Kathy actually, gave you the link. And I'm going to just actually, hang on, let me see if I can give you the link over here. I can't, I have to do escape. Here, let me copy this. Control A, Control C. This is a discount code to just come join me. But actually, the really, really good deal that I'm going to give you, hang tight, I'm just going to pull this up. The really great deal, if you really want to trade with me, you want my coaching services, and you want to be able to pass the prop, I'm going to give you the link to my pass the prop. I got to just find it. Just 1 second. There we go. What that does is it basically $100 a month, a little bit more than $100 a month for 3 months of trading with me. All the indicators. You get Kathy's FX strategies and coaching, which I'm going to be doing tonight. So if you join with me, I'm going to be coaching you guys tonight, 7 o'clock at time. So feel free to come join us. Absolutely take advantage of the prop deal from Apex, and I'm open for any questions that I can give you. Here, let me come back over here. Present, full screen, present, and go backwards. Not go backwards. Go backwards. Go backwards. Here we go. Okay, so talk to me, my friends. I'm going to be looking at your sense. One question: how do you stop overtrading with this method? The easiest way to stop, Jigesh, is you say, like, this is what I do. I say I'm going to trade 8:30, 10:30, right? First of all, I'm live trading with you guys like every single day, 9:30, 10:30 anyways. So, you give yourself those 2 prime hours. If those are not good hours for you, then the other great prime hours is 1 p.m. New York. This 1 p.m. New York to about 3 p.m. New York, right? If you want to trade gold, really, really good trading hours for gold is if you're in Europe, I'm going to give you New York hours again. 3 o'clock in the morning, New York, until about 5, 6 o'clock in the morning, New York. So whatever, that's the kind of London open, London market, right? Robert, message me in Discord, and I will show you. I mean, just join. Just make sure you come to the webinar tonight. There are people from Passive Prop asking me, and I will discuss all of this stuff. If you're in South Africa, Apex does not take traders from South Africa. We're happy to have you in our course, but for right now, if you're in South Africa, you're not, they won't take traders from South Africa. But if you're, in all the sort of other, if you're in Europe, if you're in Australia, if you're in North America, the cool thing is if you're American, there's no problem. There's a lot of Americans are just shut out of all these prop firms now. Not here. Any American can trade with Apex, and a lot of Americans do. They're an American company. So if you like it, come hang out with us. It's really, really cool. It's really cheap. Like $35 for knowledge is nothing. If you combine the two, if you just kind of you get the pass the prop, $100 a month, and you buy a couple of accounts, at very minimum, of course, I can never promise you results because everything is nothing is guaranteed in life. What I can show you is that lots and lots of people who are in my passive prop are passing it literally every single week. But what I can absolutely assure you is I will coach you to become a better trader. You will absolutely see market price action, understand price action, and learn how to do it. Most importantly, learn how to do it on somebody else's dime. There is just nothing like learning not on your own money. It is such a powerful skill, right? This is why surgeons practice on cadavers, right? Let me be your cadaver and practice properly. Yeah. Ethan. Ethan, I saw you. Message me on Discord. I'll flip it around. No problem. I'll upgrade you. If you guys just joined, by the way, there's a couple of people that just joined us at BK. They want the passive prop product. Just message me and I'll upgrade you, and you'll get sort of the best deal. You get the best deal. Absolutely. Seriously asking me, passive prop have drawdown gimmicks. I'm not quite sure what that means. There's no gimmicks. There are rules. We follow the rules. We pass the test. There's rules to the LSATs. There's rules to the SATs. There's rules, not anymore. Clearly, there's no rules on college campuses now. But in real life, with the real serious, responsible people, there's always rules to how you pass tests, right? So we follow the rules and we pass the test given the rules. That's how it works. All right. I'm going to not get on my soapbox right now, but yeah. So I don't know what you mean by drawdown gimmicks. There's no gimmicks. We know the rules. We stay true to the rules. We pass the rule. We pass the tests. Those are the things that I teach in my coaching. No funny business. All straight up front. The whole point is to make you trade for life. Rules to draw down even after recovery. I'm sorry. Maybe, seriously, I don't understand what you mean by that. If you're really, really serious, you can email me or you can just join me in my coaching session, and then we can discuss it in much more detail. But we follow all the drawdown rules. The guys who pass the tests never hit drawdown. I'm right now, I'm annoyed right now because I'm logged on my other computer. I can't show you. The account, I have a $50,000 account I'm running right now. I've passed a few of these things, right? But I have an account right now that I'm running with everybody. It's a $50,000 account. It needs to get up to $53,000, right? I'm at $52,138 right now, right, on that account. I've never come close to the drawdown. right? So clearly I'm moving slowly but surely. I'm trading very slowly to the, towards the $50,000 level. Hopefully I'll get there maybe this week, maybe next week. But that's how you avoid getting hit by drawdown. You just keep trading small, trading consistently, and trading positively every single day. That's what we teach. That's what I love to see. There are people who have traded with me who have, I get this all the time, and I love this. I've been a losing trader for years. I haven't been able to do anything. I've really wanted to crack the code on this. And now, for the first time, I've actually passed the test, and now I understand, and I'm so happy. I get that all the time now, literally the single best feeling in the world for me. Do I get the indicators to work? The indicators are for TradingView, okay? And I recommend that you take the HYPOTHETICAL. Now, so the deeper question is, do we have these indicators for NinjaTrader? And the answer is yes, sort of. In other words, we have them. We have them written. They have to be updated a little bit right now, but and I will have it. If you're a serious NinjaTrader trader, we will have that for you probably within a month. But the point is that almost everybody loves using TradeOvate and TradingView. So using these indicators with TradingView and TradeOvate is much easier. Okay. All right. Thank you so much, guys. I loved having you guys around. I'm going to try to schedule the live trading tomorrow. I cannot promise this. Watch the channel. I'm going to try to, because it's kind of a crazy week. This is my first week back from vacation. There's just so many meetings and everything got slammed out. What I will promise you is I'm back next week hardcore. Tuesday, Wednesday. Every Tuesday, Wednesday, we're going to get serious about trading this. We're going to do 9:15 to 10:30, 9:15, 10:30. Yeah, YouTube live. All of you bastards who are telling me, oh, you're not trading today. I'll be trading with you. I'll be happy to trade with you. Okay, I'll be trading live, and you're going to be eating your words. Today, I really wanted to spend the time to get you to understand the methodology, because without that, it's immaterial what I do. But I will be doing it. So probably most likely, I think we're going to probably trade starting next week. Especially, why I'm not going to do it tomorrow. Tomorrow's a stupid day to trade. You got FOMC coming out at 2:00. The real time to trade tomorrow is going to be after FOMC comes out. So we're probably not going to do it live tomorrow. But next week, hardcore, I am totally down. YouTube live, 9:15 to 10:30. Every Tuesday, Wednesday, we're going to be there. So come join me. Just keep that on the calendar. We'll publish and update it, and I'll be just trading all these ideas. So everybody have a wonderful day. I'm going to leave you one more time with this link so you guys can take advantage of it on. Where's my thing? Sorry. This is the BK, the Apex discount link. It's just a good link, and it's expiring today. So my whole point is inventory this stuff. If you inventory this stuff, you can then use it whenever you want it. That's the really smart. My wife is a great value hedge fund trader. She's like the quintessential person that buys hats, straw hats in winter, and ski jackets in the summer. This is a great thing. If you got 80% off, this is the perfect example of doing that. Lock down just the cheap price. You won't be sorry, because you spend so little money, and then you have all this power to be funded. You get funded. It's the cheapest way to get funded. Yeah, I love discounts, but nobody loves discounts more. The two women in my life, my wife and Kathy, are the discount queens. I could give a flying F, because I'm a guy, but I definitely think this is a great deal. So anyways, guys, thank you so much. It was so much fun. Loved having you guys around. I will see everybody. I'll see everybody in the markets. Everybody have a great day. Take care.